Hey, greetings, Dr. Jeffrey Scott here. I thought I'd do a video, which is the third thing that'll be posted this weekend, just on the basis of current events and the current futures. Um, that title was actually written before the futures even opened. It was time for a pause to refresh with a question mark as the markets are short-term overbought. Um, when I talked live during the webinar, I made the case that we're going to pull back this week, whether it's Monday, Tuesday, Wednesday. But a pullback doesn't have to mean we're going back down to retest the lows. And right now, the way that oil is behaving, despite the saber rattling, yeah, I think that a little bit of a pullback, let the market blow off some steam, and then we just keep going higher is my expectation. But we live in a very news-driven market. The ceasefire is technically over Wednesday. The things that are going on in the Straits of Hormuz make you wonder if it's a make-believe ceasefire anyways. But let's go ahead and take a look. Um, as always, is for educational purposes only. Anything I talk about should pick in the spirit of education, not investment advice. The intent of this video and all my videos is just to teach people how I do things, how to use my tools for top-down analysis. Trading involves risk. You're solely responsible for any decisions you make. I may own or intend to buy, sell, hold any stock I mentioned. Trading stocks and options should be considered risky, and you should consult with your financial advisor before making trades. If you didn't know about the other videos, I did a live open webinar on Saturday. Had a bunch of people showed up. I always enjoy the live interaction. We were able to answer questions as we went. And I posted it in two separate parts. The first part is really talking about, well, I think I gave it the obnoxious title of how I'm up over 500% since the tariff lows, which is true. And I show you the supporting data, although I also make a strong case that you shouldn't trust anything you hear on YouTube. But I showed you anyways. I went over my philosophy, what I learned from how I look at the markets. We ran through the top-down perspective of the market, and we looked at a couple of stocks. I have to admit I wasn't that excited by anything I saw that I had to go out and buy. I really think that the market has a little bit of work to get done. Not to say that there aren't some cool things going on. The second part is how I trade options. And yeah, I'm an okay stock picker, and I think I'm pretty good at timing the market. But I think what I do with the options is key. And I spent a lot of time in the first video to talk about what I mean by rolling up and out. And in the second video, I looked at specific strategies that I follow. So take a look. You might like it. Top-down trader group, it's free. It's how I communicate. If you were a member, you'd actually get the slides, not just the videos. And I posted them yesterday. If you're having trouble downloading it in top-down trader, some internet providers seem to be cutting it off at 2 hours. Some people are able to download the whole thing. It's all there. Just go to YouTube and you can download it from my YouTube site in two separate pieces. But in the Google group, just go to Google Groups, go to all groups, look for top-down trader, let us know how to contact you and how frequently, and you're in. Sad note, one of our members actually passed away, somebody I've known for a long time. I won't mention his name. Our condolences to his family. And I've known him for so long at HCSI, I have some filters that have his first name on them because he's the one that came up with them. Except for the war, it's not a bad news week. Nothing scheduled on Monday. Tuesday, we got some retail, some inventories, pending homes. Nothing on Wednesday. Thursday, jobless claims, PMI. That's probably the big day. And then the final consumer sentiment on Friday. Sentiment's been low, and that's bothersome. Big week of earnings. I think we got next week's going to be some of the big tech weeks, but we still got Intel this week, which has been a growth stock again. Tesla, a bunch of the software, Vertiv, which is a data center play. So there's a number of important things. As it says in the lower right-hand corner, it's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. I took a lot of profits on Friday. A lot of my option trades, especially the broken wing butterfly, If I'm not managing it and I'm just playing for the 3-to-1 or whatever return I get, and I blow through the upper limit on the butterfly, I basically just let them expire and I get a check or I get a transfer into my account's balance. So I had a lot of those expire on Friday. They were all in the money, beyond, which means I covered the short call spread and the price was beyond. The good news is I made money on the trades. Bad news is I could have made more money with a call or buying the stock, but over the length of time, that trade's done me well. And I go into great detail in the first video from this weekend. It's a judgment call, hold stocks over earnings dates. Bad judgment to not know when your stock's earnings date is scheduled. Phoenix meeting is a go. June 5th through 7th. I'll come in on Friday, which is probably the 4th. We'll meet all day Friday and Saturday, half day Sunday. It will be in a location fairly close to the Phoenix airport. It's probably going to be in a full service Marriott. As of right now, we'll supply breakfast, lunch, or the hotel may supply breakfast, but lunch, fluids throughout the meetings, water, soft drinks, coffee, and then we'll do dinner as a group on Saturday night. It's $500. We'll do an internet version, same price. Um, I prefer people in the room, and if you've ever been to one of these live meetings, the networking part's the key. I'll have a second live meeting in partnership with John Person in November. I did have a special at the event. I did, and I'm going to keep that pricing through April 30th. So the current price on Market MRI Pro is $26.95. We've had it on sale a couple times for $19.95, and I've decided to drop it down to $15.95. And there's a reason for that. You have to be a member of Top Down Trader to get that special price. If you watch the first video, you'll see that I'm in the process of a business change, and what'll come out of that change will be a partnership with a brilliant, well-known, highly followed technical person, analysis guru, indicator builder, professional money manager. And we're going to take a product that we built for him and the product that I built. We're going to combine it into a single product at a price that's going to be higher than the regular price here. His tools for TradeStation, for example, were $3,500, and they have nothing compared to this package. However, there will be an upgrade that if you at this price, you'll get to come in at an upgrade like any of the other current users of my tool, and your combined price will be probably in the range of what the introductory price is for the package. So it's a way to get in early and get treated right. So I want to do that. So to April 30th, and you get the first year of the tool, updates that we make at the anniversary date, which will be probably for May 1st or so. We will then start to charge you an annual data fee. If you stay with just the single product, the data fee is going to be $4.95. May go to $5.95 because our data costs are going to go up. With the joint product, we're looking at $8.95. Yes, you only need the data once, but you have two different people supporting the product with new tools and the education. So something to look for if you have interest in it. Just join the Top Down Trader. By the way, it's free. And reach out to me at marketmripro@gmail.com and I'll set you up. All right, let's go take a look at the charts. This is going to be a quick one. I taught on Saturday. I'm going to just talk right now. Bitcoin was really high last week. You could see on the week it was up 5.73. It was up half of that on Friday. That's wonderful. Certainly a big positive. Hold on one second. All right. And the markets were strong as well. I mean, certainly the tenor, the feel of the current markets have changed a lot. You could see 1.21 was the laggard on the SPY, Q's 1.31%, 1.78 on Friday on the diamonds, Russell 215. You want to see impressive 6% plus for the Q's and 5.5 on the Russell. It was a super, super strong week. The dollar was down a bit, 0.29. Volatility was down 5.82, and the VIX futures are finally getting down to what I would call their base rate. So I think a lot of the fear have come out of the market. If we look at the new high minus new lows at 52 weeks or a year, massive increase in highs, and we're losing the lows. Very positive, very bullish. If we look at participation, sectors and industry groups were much higher on Friday than Thursday. 83% of the S&P 1500, 70% of the NASDAQ, 77% of the NYSE. From a market S&P perspective, tech led. Actually, I may fix that. I messed that up. I had sorted it before. I must have done something So we have discretionary up 2.36, industrial 187, 153 on real estate, 153 on tech, 149% on healthcare. And the laggards were energy and utilities. If you look at themes, home construction, because rates came down with the week, silver, leisure and entertainment, blockchain, big things leading. Not much in the way of laggards. They're pretty much energy related, whether it's exploration, Norway, renewables, or MLPs. Now, futures are out now. Let's just talk about them. They opened up about 500 to 600 down on the Dow and just over 300 down on the NASDAQ. They continue to improve, and currently the Dow's down 393, the NASDAQ's down 128. Bitcoin is down quite a bit, 3,200 right now. But the tell, I think, is oil. And if you remember a week ago, the light sweet crude was bouncing up to 110. It's 87. So yes, it's up a lot. It's up $5 tonight. However, if you think about where we were a week ago, and I'm looking at a chart now, and this instrument was up to, let's see if I can get the date. It's hard for me to see the date on this chart, but 2 weeks ago, this thing was over 115. So yeah, we're going to jump at the open, but we have to look at where we came from. So I think my title makes sense. We're going to hit a pause to refresh. Might make sense here. Might actually be bullish. Take out some of the, I'll show you the overbought enthusiasm. I don't think we're cratering on this news. Now, lots can happen. Do we bomb their infrastructure? Markets go down. Do we extend the ceasefire? That's probably good for the markets. Do we get a deal? That's great for the markets. Do we open up the straits? That's great. And the fact that we captured an Iranian ship, probably not so good either. So I think it's mixed. And clearly, if you just watch the news flow, what comes out of Iran and what comes out of the U.S. are not like on the same planet. I don't know how much of it is the news sources and how much of it's reality. And frankly, with the current regimes on both sides, what is reality? And again, I am not being political. I voted for him. And I still like a lot of the policies, but sometimes it seems to be going a little bit cuckoo in what's going on in the world. If we look at the timing brief, and we start on the monthlies, everything is a buy, no surprise. We look at the weeklies, and the good news here is even the Qs, the diamonds turned positive this week, the spiders turned positive this week, as did the Russell. So we are in a buy signal on the weeklies. If we look at the dailies, we are in a buy on all four of the dailies. So I have to be directed long based upon my tool set. Now I'm going to show you things over the next few moments that temper it a little bit. On the index ETFs, we've been bullish for the last couple of weeks. We've had our follow-through days. We've had all that we need. One of the things that we talked about over the weekend was if you look at this being the follow-through day, and this is a higher high, so it counts as an up day. 1, 2, 3, 4, 5, 6. We've had 7 in a row of hold on one second here, see if that'll do it, of up days after the follow through day. So Mike Webster, who I think, well, I think my wife thinks I have a man crush. I do not have a man crush on him. I just think the guy's brilliant. Did a discussion of that today and this weekend, and he looked back to the 70s. 73, I think, is the first state. There are only one, two, three, four, five follow through days going back to the 70s, and we get follow through days several times a year. So that's 50 years times three. A year is 150. There's only five times we've had more than 7 days. So based upon that, we're going to have something's going to happen. If you go back and look at them, some go higher after a pause, some go lower, and some just go sideways. So beautiful move, just getting extended. The high jump is now up to 96.60, and we'll look at some of the other measurements. Still got good seasonality, nothing nefarious that says we're in big trouble. Look at the NASDAQ. Holy Toledo. This is dangerous. We need a flag. We need a pause. We need something. And then let's run again. Seasonality is good. And shocker, we're not at 100 or not at 95 yet in the high jump. But we're getting close to oversold there on the bigger picture. And we'll look at the short-term picture momentarily. The diamonds, also a big run. Good seasonality, 78. Again, not as extended. They haven't taken out their highs yet. And newsflash, the Russell set a new all-time high on um, on Friday, and hopefully it won't be like this all-time high. And several of the all-time highs that we've hit over the last couple of years become the short-term high, and the market pulls back. But big gap up on Friday, 95 or so on the high jump, getting extended. So the good news is we've cleared the moving averages. We've hit new highs. New highs tend to go higher, and I'll show you my concerns in a few moments. The VIX, love it, love it, love it. It's now back down here and kind of where we should be in between spikes. That's great. The dollar failed at the 100 level here on the dollar versus futures and has come down. Doesn't seem to be a concern right now. If I look at commodities, and I did notice several gold stocks, silver stocks actually looked buyable here because they're starting to base. Now, gold is running up, ran into the 50. Seasonality sideways, probably doesn't go to new highs anytime soon. But gold is starting to become constructive. On Friday, it gapped up, closed kind of at the low of the day, up 1.33. Silver, a better day on Friday, actually cleared the 50s, up 3.36. And both of them, like I said, some of the miners actually looked interesting. If we look at oil, oil had a huge drop, and now we're probably, well, let's see if I don't know if I can get USO overnight. Let's just see what USO is. I could put the futures there, but it'd still be the end of the day on Friday. Oil after hours is up to 122. So 122 puts it around the high of the day here. So the high, actually below the high. Oh, I'm sorry. 122. I was looking at the wrong day. This thing opened at lowest was 124. So it's probably going to pull you in right here or thereabouts to the 21-day EMA. Retracement there, I think we're okay. Natural gas, nothing going on. And then what I really liked on Friday was the 10-year came down a bit, 1.46. It's now at 4.25, so it's below the 4.3 area. And the 30-year also came down a little bit less than 1%, and it's down to 4.89, so it's getting further away from 5.0. Nothing there is bad, so why was I at all negative? Well, buckets. We have shifted to the right. We're starting to build stocks out above the Bollinger Bands, but none of this is high enough to be concerning. 11% of the NYSE is above the bands. 12% of the NASDAQ's above the band, 16% of the Russell, and 12% of the S&P 1500. That's a bullish looking pattern. Yeah, it's a little bit concerning, but as of right now, it's not a signal. The market breadth, and now we're going to get interesting. You could see NYSE and the NASDAQ, high jumps going up, but neither of them are above 90%. But if you just got to you look at the NYSE and it's moving higher, it broke above its anchor VWAPs from the high of this year and last. You look at the NASDAQ composite, similar to the Qs, you have multiple follow-through days. It's going to the moon. Things do not go up straight like this. New highs here, not yet on the NYSE. Some of the concerns. I'm going to scrunch it up a little bit, and you can see that the short term here, stocks above the 20, is kind of where it was back here when we had a little bit of a pullback. And if I scrunch it up even more, you could see that back here before we rolled over, this is about high as it gets. Now the red and the white, the 200 and the 50 stocks above those might go a little higher, but the signal here tells me we're probably getting close to a peak. You can see the 20-day here versus here, and this just means you've got more bullish patterns, more stocks above the 20 here than we did back here, and here's it as well as here. So we're getting extended, okay? We look down here, we can see new high, new lows. AD lines, up, down volume are bullish everywhere. And I'll tell you what really impressed me on if we go back a little bit in time, is how long of a period we went with only one day barely negative new highs minus new lows. This is what bull markets are built upon. So jumping up like we did on Friday is a long-term bullish. So why am I concerned? Well, 0.24 on the 13-week high low. It can get lower, but it's at a level where, oops, let me get to where we are today. My bad. Not 0.24, Jeffrey. It's 0.95. 0.95 is a level you expect to reverse from. So we are short-term overbought. This is not a signal of a market collapse. It's a signal of an exuberant market that needs to take a breath. Over here, it is 0.92. Both of them are close to areas you expect a bit of a pullback. Again, it doesn't signal a major correction. These are Hindenburg omens. Those are big picture things. This is a phoenix. That is a big picture thing. We have the bangos, and that's just another signal of exuberance. So my guess is we have a little pullback. But we don't break down and we do go higher. But I expect something to happen this week. If I just look at some other indexes, I mean, if you look at the S&P 500, it's at 0.98. That means that it's at a level that you almost always expect to see the market reverse, short term. 0.98 on the S&P 1500, 0.9792 on the NASDAQ, 0.97 on the Russell. So yeah, we're going to pull back. It doesn't mean a collapse, and that's very important. Look at the AD lines here. We're like, it's amazing on everything except for our friend the NASDAQ. That's kind of, to me, a divergence in that higher highs. But down here, higher, let me get this straight, but we have not taken out the recent highs on the AD line on the NASDAQ. So that's a little concerning. Again, my expectation, pause to refresh. Ratio charts, just want to call out the strength of technology. And if we go into some of the key stocks just to see where we ended the week, because it's very different than where it was a week ago and different from a positive perspective. Amazon, hold on. Amazon had a great week. It closed on a low note on Friday, but still was up 0.34%. I've been long since down here. Actually, since down here, which is the same area, and it looked like maybe I made a mistake, but we've had a nice run. I am still long. That's a candle that looks like we need to pause to refresh. If we look at Apple, Apple's had a nice breakout. When we talked about it, we get above the 50 and I'm in. Apple looks really good here. Google looks great. Google has a share of SpaceX. It probably also has a share of Anthropic. I know it has one of them. I thought it had both. I might be wrong on that. But look at Google, close to highs again. Let's see the monthly. We are almost at all-time highs. Pull, flag, breakout. I think I mean, I shouldn't call it Google anymore, but Alphabet looks to me does still look great. Look, we got the mags participating. I haven't shown you a dog yet. It's coming. Oh, Meta. All right, that's an hourly chart. We're not looking at hourly charts, but that looks pretty darn good, doesn't it? Meta has broken out above the 200. God bless Meta. Meta, to me, has broken out, and I should have bought it down here, but it would have violated everything I did, and the opportunity to buy it from the way I trade um, was up in here. Netflix has broken out, but we all know it collapsed on earnings, and that's the fear that we have. I talked about that on Saturday. I actually had put coverage, thank goodness. But are we going to go through another earnings period where each of the mag stocks takes a hit? I don't know. Tesla, beautiful. No buy, no buy, no buy, no buy, buy. Has broken out even above the 50. It's getting through resistance. I hate the fundamentals, but if I don't consider it a car company and I think of it as a tech company, maybe it's not anything to be concerned about. So that always makes me nervous on their fundies. But you got to break out here. And if the market goes higher, so does Tesla. And then maybe my favorite stock, if I had to buy something tomorrow, is if I didn't already have this as my number one position in my account, NVIDIA had a great breakout. NVIDIA looks great. Its earnings are probably 3 weeks or so away. What are they, 429? Not 3 weeks, 10 days. Whoa. Microsoft, this one looks, well, it looked really ripe here. Still got to get above the 200, but being long Microsoft makes sense to me right here. Biotech, a lot of the stocks that showed up my scans are biotechs. There's a lot of acquisition activity, a lot of data coming out. Typically this time of year we start to get ramped in biotech going into the Cancer Society meetings in the end of May, beginning of June, and biotech's on the move. A lot of people won't trade it because of the news risk. I like buying the ETF, although right now I got several small biotechs that have news coming in May or June, I hope. Software has struggled, actually broke out of the resistance period, closed just above it. I'm not convinced here. Data centers to the moon. We talked a lot about this on Saturday. I'm having a great year. I've had a great year since the market bottomed. Ridiculously great year. And part of it is because of data centers. And will this turn out to be an island gap and a reversal, an exhaustion gap? I don't know. A lot of the stocks have had big moves, and I did lighten up on Friday just because I let things expire instead of up and outing them. I have thought that Shield, which is defense, would do something, and it's really not doing anything. So I think overall, I see a market that, gosh, it's been great, but it needs to pause. It needs to take a breather. Didn't say it needs to crash. If I go into the top-down view and I got 3648, let's just do this real quick. Let's look at percentage return on Friday, and that's probably one stock. Let's see. Nope, it's 50. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So these are the top performing industry groups, not within the sectors, but in total. on Friday. And let's just look at 2-day momentum and let's just look at the first 10. AutoZone, not yet. So Royal Caribbean, Carnival, Viking, Norwegian, all kind of look the same, and they'll go down if oil prices go up. But I think they've shown us every time oil falls, they move. So they're on my watch. BlackRock, I like to see it above the 200. It sort of reflects the whole market. Autoliv, I don't know if this was an earnings. I think it was. So we can look here. They had 205, which was a 12% surprise. 275. So not a lot of growth, but I think the surprise is what drove the price. I'm a simple guy, and I think that long-term earnings are what is the most important thing in pricing a stock, and that as you go into earnings, the numbers that are predicted, even the whispered numbers, are probably already reflected in the stock price, but it's that surprise that can come in and make the big difference. So I like looking at surprises. IBP, a stock that's probably involved in some of the data center. I can go up here, and too much for me to read. But it's involved in building structures and in insulation, fiberglass. You know they need this in data centers. Just look at Fix, which is the air conditioning. The stock that I worked up over the weekend was 5 below. I liked it a lot. Beautiful uptrend, pull back to the 50, breaking out here. Uptrend not expected. It had squeeze, momentum, breakout, and volume. I like that. Relative strength about to cross. This is the only thing that was lagging. And then volume looks good. It's not extended. Seasonality looks kind of flat to positive. So this is the one I worked out on the weekend. If you want more information, take a look at the weekend. Costco looks really good here. Basing, is it ready to run? Um, you know, it actually, let's look at Target real quick, TGT. Target looks even better. I just don't think it's as well run. And then I got Wally Mart also looked like at a good ball at a decent buy point if it can take this line out. Expedia, when this war ends, the travel stocks rebound, and I think it's already starting. I mean, the market's discount. So that's top down at its best. That's looking at a couple of different stocks, getting my watch list ready. Not planning on buying a lot at the open tomorrow unless something dramatically changes. I do expect a little bit of easing before we rally higher. And the other thing is, I'll just do a quick look at my all right, perfect. Let's go back to the impulse, which is my bottoms up. I thought it was interesting that I had nobody in A plus. Why? Because A plus pretty much starts when a stock is pulled back and you have a couple of big momentum days in a row. You probably don't get that at the top. So I shouldn't be surprised in an extended market. So if we kill the A pluses and we take a look at the A's, which are more pullbacks and an uptrend, I'll just point out a couple. Frontier, the fundies didn't get me that excited, but a massive move up, pull back here and a breakout. Fundamentals are here, earnings are 529. So if I look at fundies before that date, not exciting. 227 versus 18 cents. You had a big growth in February, and that caused this run up here. Revenue of 56 versus 42. So maybe Frontier is about to become a growth stock with increasing with the sales and the profitability going up. MITK has just been teasing me, but this thing broke out, failed. Is it ready to run again? Seasonality looks okay. Massive amount of good things here. Squeeze, a PSAR reversal, momentum, breakout, volume, gap, not extended. Earnings are out 514, 32 cents. versus 16 cent, 36 cents. That's not great, but look at the surprises that typically come in here. And revenue 5.26 versus 5.19. I like the pattern there. Road is a construction stock, does have some involvement in building out data centers and areas around them. I just love how I can put my thing here and see what we get. Um, all the things you need to build a data center from a land perspective. Now, I don't like the loosey-goosiness here. Earnings are 5.8. Doesn't look like a big positive thing there. I just like the breakout above the 50 on massive volume with momentum, breakout, and volume dots. And VTRS kind of reminds me of the Frontier chart. So earnings are due May 7th, 52 cents versus 50 cents, flat 335, 325, flat, pays a 2.4% dividend yield, uptrend, pullback, kind of a shallow saucer, and a breakout above the 50, coming out of a squeeze with momentum and volume with relative strength crossing like this one. So I didn't show you a lot of tech stocks because a lot of these stocks have pulled back and are rotating, and we have had a very rotational market. So there are things that work. A lot of them are not semiconductor tech, but they might be supporters of data centers. And just to put NVIDIA up, and then we'll say goodnight. I just love long bases and a breakout. Now we failed it here, so be careful. Look at seasonality. $1.76 versus 81 cents. 78.42. Oh, here it says it's not it's 31 days to earnings. That's more so. 78.42 versus 44.06. It's got a multiple 28 forward. You hit these numbers, you don't disappoint. This thing's going back up. It's going to hit all-time highs. We'll see how far it goes. There you go. Too much talking this weekend. I want to do this in 20 minutes. Have a great week, and I should be able, let's see, Monday night will be good. I'm not sure about middle of the week. I've got a bunch of travel for work. Take care, everybody, and go watch those two videos. You might be amazed.